Hey everyone, it is Julie. Welcome to JT Wealth Investing 101. Today we are taking a look at what a PE ratio is. So here we go. All right, so today we are taking a look at the PE ratio, which is one of many metrics people will use when trying to value a stock. Now, a PE ratio is the price to earnings ratio and is obtained by taking a company's current share price and dividing that by their earnings per share. Earnings per share is the amount of a company's profit allocated to each outstanding share of a company's common stock. Now, a PE ratio will help tell you how investors perceive how a company is performing. Simply put, the PE ratio will let you know how much an investor is willing to pay for $1 of that company's earnings. The PE is sometimes referred to as the price multiple because it shows how much investors are willing to pay per dollar of earnings. If a company was currently trading at a PE multiple of 20x, the interpretation is that an investor is willing to pay $20 for $1 of current earnings. A high PE ratio could let you know that the stock price is high compared to their current earnings or is overvalued. But it can also let you know that investors are expecting high growth in the company's future. Companies that grow faster than average typically have higher PE ratios, such as companies in the technology sector. So that higher PE ratio just shows you that investors are willing to pay more for that stock right now based on those expectations for the future. Now, the most common question when it comes to this is, what is a good PE ratio? But there really isn't a black and white answer on this. The average PE for the S&P 500 has historically ranged from 13 to 15. If we look at a company like Walmart, their PE ratio was recently just shy of 27. But if we take a look at a very high growth stock like Tesla, their PE ratio was recently over 1600. Now, a big key with the PE ratio is to make sure that you are comparing apples to apples. If you are looking at a technology company, don't compare its PE ratio to that of a financial company. Make sure that you're comparing companies within the same sector. So that is a quick overview of what the price to earnings ratio is and how it relates to a stock's current price versus their earnings. Now, it is just one of many ratios used to help value a stock, and we will cover more of those shortly. Thank you so much for watching, and I will see you next time.